Please welcome President and CEO Hunter Hotel Advisors, Teague, Hunter, and the Main Street Talks panel.
Wait, we're not over yet. You can't leave. You can't leave. There's one more. Everybody got to sit back down. Everybody's like, well, we're out of here.
Hello, yeah.
Except these guys are going to be insulted. That's right. That's right. That's right. That's right. That's right. Oh, I got this.
That's bright.
All right, one more. This is why you paid all your big bucks to come listen to these guys. No? All right, maybe not. Thank you guys for having me. Wow, I thought that last panel was great, by the way. Who enjoyed that last one? Yeah. Those guys are clearly wicked smart and talented and connected. So are these guys. But we're going to, with all due respect, we're going to dumb it down a little bit, right? We're going to bring it down. Those guys
Speak for yourself. Speak for yourself.
I mean, I know you have your international portfolio, Brian. And you can talk about spending money in Asia and the like. But if that was sort of Wall Street, this is Main Street. We're trying to bring it back down to what I think most of the attendees are and what they want to hear about, and operations, and what we're seeing day to day, and what these guys, with not all of that access to capital and data and international, are doing with their time and their energy and their money. So hopefully it's what you guys are doing on a day-to-day basis and what you can see. And if there's a question, somebody raise a hand. But without further ado, let me introduce the guys that are here, because I think they're great, and thank you for being here. But Neil Amin, Shaman Hotels, maybe longer intros, but Neil's out of Richmond. I call him my version, if I'm wrong. Neil's family office, so second generation in the business, done an incredible job, mostly out of Richmond, but owner, operator, developer, all the above. How many hotels do we have now?
78.
78. He's never sold a one, by the way.
Oh, wow.
He owns 78. He's never sold. Remember Mitch earlier talking about beer and wine? A lot of beer, holding on a lot of beer. He's got some beautiful hotels now that are the beautiful wine that he's built. So prolific developer. Thank you for being here. Mark Laporte, Concord Hotels. Hopefully everybody knows Mark. Old school owner operator, now third party manager and institutional investors. You probably still have your friends and family in there with you now.
Sure do.
How many hotels now?
148.
148? 148? Developer, building big, beautiful ACs and managing everything in the country, right?
Some of it, yes.
Some of it. Thank you. Brian Quinn, Sonesta Hotels, not just a pretty face. Brian Quinn, Chief Development Officer, Sonesta. And one here to speak for the brands, but also, if we can get him, Sonesta, as you may or may not know, owns a lot of real estate. So one of the few brands that still owns a bunch of their real estate. If you've seen it all over there, they own a bunch of real estate, made a big switch, big transition from sort of franchise to ownership. Brian's built his development team significantly, so I want to hear about that and why you're so bullish on the space. And little secret, they're in the middle of a billion-dollar-ish transaction right now, so let's see if we can get him to say anything from the stage that we might learn. We know. We'll see. I just got started with you. And then one of my favorite people, sorry, but Azim Saju from Ocala, Florida. Can I do that? Can I say Ocala, Florida? His family's in the audience today. I love Azim, great human being. Azim, my words, if I'm insulting, I'm sorry, but just sort of the classic hotelier with, I don't know, a dozen, 20 hotels, he and his brother doing it, and then 2 years ago announced a new company. I'd like to know why you announced that, but now went from just a handful to a third party. Now, how many hotels are we managing, third party?
About 80.
80. So in 2 years, and I know the ones we had, but up to 80 hotels managing third party. And how many under development?
We have 5 that are actively under construction right now.
Thank you. And how many under contract to buy before the end of the month?
Where's my finance guy? I think we're definitely closing on 2, one of which needs to be funded. We're looking for equity for it. I think it's closing this week, but meet me at the bar.
So if everybody wants to know who the buyers are today that everybody's talking about, I think Azim counts as one of them. All right, so sorry, but you ended, so now I'm picking on you. Why you started this? You agreed to come on this panel. It's your fault. Why? Why are you aggressive? Why are you buying? Why did you go from 0 to 80? Why are you buying 3 hotels right now? Talk to me. Everybody else is panicked.
I mean, I look at the business from a very Main Street perspective. My dad didn't even have a high school education, and he bought a hotel in 1980 when inflation was high, interest rates were high, the economy wasn't good. and he created value and made wealth from it. So my simple view of our business is get deals done, right? I mean, there's always going to be reasons to not do stuff, right? The economy is bad. Gas prices are high, regional geopolitical instability. Have a strong team, a strong culture, a strong operational partner. Underwrite it, but get stuff done. And that's not to make light of the risk that is our business. There's a risk component that's very real in our business. But if there wasn't a risk component, there would be no reward, right? No risk it, no biscuit. So.
I love that. Mark, do you have to be right on every deal? Is Azim right or is Azim crazy? Is he going to go broke quickly?
Azim is always right on. In fact, a lot of what Azim says, I would agree with fully. My company's not been around as long as your dad was, but we've been around 40 years this year, in fact, and have built a business much like Azim said, slowly at first, one at a time, building an organization that was people first and always people first. And when you do that, my strong belief, and you do it with good partners that are aligned, you can continue to grow and have fun in a great business. How's that for a simple answer?
Yeah, no, I'll take that. Neil, what's your take? What's your take on growth?
Yeah, I mean, growth is a necessary evil, right? I mean, or a necessary positive, right? The way you look at it. I mean, and if you're too cautious, you're missing out on the best opportunities, right? You have to make some mistakes. If you're not making any mistakes, then you're not really taking advantage of all the opportunities that are out there.
So, all right, so I'm putting you on the spot like the last panel. How many buying, how many you selling today? You're not, you're building, I know the answer, but.
Well, we're building 8, we're probably buying a couple more for the end of the year, for sure.
Mark, how about you guys? Transaction volume.
We have 7 under construction, although I would say before going into 2019, we had as many as 24 hotels under construction at one time. So the world has changed, of course, but it's getting better from a developer standpoint. Also buying some hotels, looking more aggressively as being a buyer given the environment than we had. But
yeah, because you guys are, maybe that's a good question. One, I want to know about the development world, but you guys have been developers, and now are you finding it better and less expensive or a better option to buy assets than develop?
well, certainly it's harder to get ground up deals to underwrite where you get the kind of returns that we would expect. We've always maintained if we can't build to a 10 yield on cost by year 3, then we should find something else to do. And for sure, we think there's better opportunities, although very selective. It's still not a wide open, crazy market as a buyer, as we all know. But I think we all feel it's getting better. And there are opportunities that, I won't say abound, but compared to 18 months ago, 24 months ago, it's a much stronger season to buy, environment to buy.
Neil, you agree?
Yeah, no, I think there's a lot of opportunities. I mean, I think really, our portfolio, we have 78 hotels. We're really evenly split between hotels that we've developed and hotels that we've bought, depending on the cycle. And, I thought that, coming out of the pandemic, we'd be buying a lot more hotels, but I was surprised that we're actually building a lot more. We're really quick to be opportunistic. That's what I would call our business. And right now, we're developing 8 and we have no hotels under contract. So we're really focusing on developing. And what I've seen personally is after the pandemic, there's a big delta between new and old from the traveler perspective, right? It's new and even renovated old is not the same. We're seeing, really 10 to 15 points delta between a newly constructed hotel in the same market versus a hotel that's been fully renovated. And I think that's really emphasizing our plans to develop more.
Azim, you agree?
I think renovation, if done right, can get there, and your basis is usually lower. But you're going to go through the pain of a change of ownership renovation with assets that need a lot of deferred maintenance and CapEx. You're going to lose revenue during that period. You're going to have supply chain issues, navigating the brand. I think that the change of ownership PIPs have become really, really challenging for those reasons. But if done right, lower basis and a product that's not new, but new equivalent.
Brian, do you want to address change of ownership PIPs now, or do you want to? Well, we'll come back to the change of ownership.
Oh, no, I'm going to get into that.
Yeah, go for it, sir.
Look, I
trying to
think
bail you out.
we're a different type of franchisor, right? We own and we manage. We've made a commitment to stay in the top 25 MSAs, even with the large transaction you referenced. And we believe that the PIPs should be rational. We've launched a philosophy to be fast, friendly, and flexible on purpose, because many of our competitors are not. The access to what the consumer really wants in a guest experience is all over the place. It's on your laptop, it's on your phone. Do those things well, take care of the guest, but you have to be mindful that the development community has to be able to make money. They have to be able to drag dollars through the business model you've created so they can take care of the guest the right way. So our PIPs are more rational because we have to pay for them ourselves on the hotels that we own. We don't come up with purple walls. We don't have pictures of our executives on the walls. We don't come up with a living wall and a standard that says, please don't have pests in the room, for a reason. Because if you have a living wall, you're attracting pests to the hotel.
I'm so glad I had you up here. Azim, you started this. So you have to renovate the hotel to stay relevant, right? To stay competitive. So at some point, the franchisors are accurate. Give me your answer on.
I think they're accurate, right? Products need to be refreshed. But I think where the franchisor misses the boat is that a refresh is cosmetic. And what's the point of spending all that money on a refresh and checking off the box on a change of ownership PIP when your hot water heaters are garbage, the roof's leaking, you have water penetrating into the hotel? What's the point? And I think that if their PIPs captured that and then had a degree of flexibility as it related to that, they'd be more palatable. Still tough, but more palatable.
Mark? Trying to hide over there.
It's
This is
always,
like talking about the IRS, right?
Yeah, I know. Yeah. So glad you're here.
we call it a friendly tug of war between we as owner-operators and franchisors. As we all know, we're not totally aligned on a day-to-day basis, but we have great respect for them, and we know that they are all about maintaining and growing brand equity. And done properly, they kind of drag us along, and we help them, and they help us in a way that's very symbiotic. That being said, these are challenging times as far as costs of renovations and PIPs with what's happening, of course, inflationarily. We're seeing re-outfitting a room being 40% more costly than it was just 4 years ago. So big bucks, big recapitalization. And when it gets back to what you stated, how do you get a return or bring some of that down? It's tough, for sure. But as Azim said, we're in the business to measure risk and to calculate rewards, and if we're thoughtful about it and do the right things, at the end of the day, we win more than we lose. We've lost some in the last couple of years.
Yeah. I'll circle back to that. I get your opinions. Neil, any comments there?
Yeah, I mean, I think, we all know that the 4% FF&E reserve does not cover the cost.
Yeah, we've done that for a while.
And I would think that, what I really hope is that the brands, if you think about the food service industry, right? Somebody who's selling franchises, they have a corporate store, they prove out the concept on a corporate store, and then they use that to go out and sell franchises, right? I'd love to see maybe some of the brands do that, right? Prove out the concept, prove out the renovation costs that we can afford it, and then we can, develop confidence that owners can do that. And honestly, it'll increase brand equity because you'll have more development, people have more confidence to build more hotels, right? Because they can maintain them. And I think more new hotels is better for everyone, right?
Neil, we had a brand here that we could ask.
That free franchise is coming your way.
Can we? Yes, please. Right? So what's it take? Why don't the brands do more? And why isn't Sonesta going first? Here's our prototype. Here's what works. This is fantastic.
We are. We just launched the Sonesta Simply prototype today. So thank you for that. We believe we are, right? We've made a strategic decision. Our adjacent affiliated company made a strategic decision to sell 114 assets. We're just at the tail end of the bidding process, and about 15,000 rooms. They will all be sold encumbered, so they will stay in the system and maintain the fee flow and the marketing fund and the growth trajectory. They'll all come with rational, fast, friendly, flexible PIPs. And at the same time, the 60 or 70 assets that we continue to own, we believe, like a lot of the founders in our industry, those top 25, top 50 MSAs should be owned and managed by the franchisor, and we should set the example. We should set the RevPAR threshold, and then ask our franchisees to build the extensions and the spokes. And because we're lucky enough to live inside a big commercial real estate enterprise, that's the commitment we've made to the market.
I love Mark. Any comments before I hammer Brian?
So you're saving the best markets for the franchisor?
Oh no, there's plenty of room in most of those markets to have both franchise and managed assets.
That's where I thought you were going to go. So tell me about this transaction. It's real time, happening right now. 115 assets. It's roughly $1 billion transaction. It's material. What did you learn? What have you learned?
Yeah, we learned a lot. This is the third tranche of assets that our adjacent company, SVC, is elected to take to market. Each time, the Sonesta prospects have grown stronger and stronger. So this entire 114 assets went to market with some geographic discipline around it, some minimum entry points, and all encumbered. And we are very close to ending the process and locking down the buyers. And then it'll be a pretty fast sprint to sort of May, June, July for the closings. There is a market out there. It was a very robust process, incredible group of bidders, many of them in this room, some folks on stage that we talked to as well. And the market proved out a great number, a number that was close to what we were hoping we would get to, if not a little bit above. And the bidders came across, all VC, PE, institutional buyers, small, large, but there was discipline around the process. There was an absolute entry point of around $100 million, and there was some geography components and some requirements post-sale, and we had multiple buyers across every one of the tranches that we took to market. The market yielded a price that was very close, if not above, where we had hoped it would be. And we're very excited about our prospective franchisees, and there'll be more news to come.
Brian, are you guys concerned about leverage for these final group or whoever you all decide to award the hotels?
Both the broker that we work with, SVC, and Sonesta leadership are working with the prospective buyers to sort of pressure test the buyers, but we're very confident that they'll be able to close. And also just, a bit of good luck. There are people that were not selected and we're still finishing that process. So if, God forbid somebody fell out, we think we'd be able to replace it. And, the tail end of this process happened in the last 60 days, right? And there's been some, crazy Ivans out there in our complex economy for sure. But we were excited to see the market form up around it and people be willing to put, very good offers together that had teeth in them. And that tells me that the market is still there, and a lot of the things that the previous panel said and my colleagues have said around resiliency and first movers and taking the risk. There are people, out there that want to do it, very smart people, and we're excited to have them in our family.
Yeah. Any comments about this, fellas? Mark's biting his tongue.
I called Mark.
We got the call. We, unfortunately, are not one of the buyers. But, I think it's an amazing execution that you're able to hit your numbers and do what you've done. So a pre-congratulations.
Absolutely.
Yeah.
Thank you.
I mean, leverage and then appraisals, right? Mm-hmm. And we had an issue with a deal recently where, an existing hotel where the appraised value came back actually lower than what we had when we purchased the hotel and after we had completed the change ownership PIP and took care of all the deferred maintenance. I mean, how does that happen? But it happened.
All right, so go down that path then, Azim. How are you getting your deals done? How are you underwriting? How are you getting them financed? How are you getting them closed? Are they
So
working?
we have an underwriting team, right? We have a separate team on the development side that really does a deep dive in terms of the underwriting. Because like I said, the risk is real and we want to mitigate that risk. Market matters. I think someone said MSA top 50 2,500 market. But I was with Mark, your CFO at Lodging, and she said 20 IRR, keep it simple. And I like simple, 20 IRR. If we can hit that, then we're going to dig into it deeper. If we can't, then move it along, right?
But the skeptic in me, there is no 20 IRR today. Unless you're making some assumptions, you have to make some pretty aggressive assumptions. So what aggressive assumptions you're making?
And there's nothing simple about Azim.
We know.
I don't consider our assumptions aggressive in terms of achieving that. Now, maybe it's not 20, but it's high teens, right? So it's right in that range. But we beat up every deal pretty good. And we make sure that we're very comfortable on the exit cap rate and not inflating that exit cap rate number so that, we feel like, we're not all over the place or overly aggressive in terms of those assumptions. And we have actually a group of several individuals that look at, when a deal is ripe for us to look at, really beat it up.
Are you adjusting your cap rates based on the interest rate?
Thank you.
Yes, you have to. Especially in the markets that we play in. We're not in Manhattan, so maybe in Manhattan you don't have to, but in our markets we do have to.
Mark, what's Azim missing? Keep picking on Mark.
It's really so simple. We just buy at a 10 cap and sell at a 5.
Makes sense.
Get your 20-plus IRR
Works
all
every
day
time.
long.
Every time.
Run the playbook.
So you joke, but that's and I'll let you come back to it, but again, I said it earlier, I'll say it again, my team knows this too well. What's the market? The market's a 9 cap, okay? You underwon a 20 IRR, it's a 9 cap. How many assets have you bought at a 9 cap? None. How many have you bought at a 9 cap? None. If I said, we're selling at 9 caps, none. Brian, all yours were 9 caps, right? None.
No
Just
comment.
not. No one sells at a 9 cap. We can all buy at 9 caps because that's what the math says. I'm telling you, the buyers aren't doing math, so I'm trying to get into Azim's head. You're making assumptions in there, right? We sell at 6 caps. I use that loosely. 6 caps because Azim says, I either like the basis, I know this market well enough, I can bring my team in here and manage it better. I can make some cuts here, so I can take the 6 to a 9. I can do it that way. And then we'll find the idiot to buy it for a 6 again, and then we'll just keep it rolling, right, Mark? And that's how you hit the 20? You think that's in Azim's underwriting?
Works every day.
Every day. Every time.
I would argue we're certainly able to source from you and others 9 cap deals. Now, maybe all in after a change of ownership PIP, it looks different. But I do say, I think you would agree, that this compression of cap rates from a seller standpoint is getting closer to a buyer's expectations.
Yes.
Much more so than it was last year at this meeting. And in fact, a year ago, although we kept testing the market, making offers, we had no deals that were, other than development deals, that were under contract. Today, we have a few of them, and it's based on that change of math.
I think you also, what are you good at, right? So we know the margins in extended stay are incredibly attractive. If you've organized your business around that and there's extended stay hotels selling in the marketplace, you know you're a potential value add buyer. What's your geography look like? You're a value add buyer, potential to make a brand change. You look in upscale, lifestyle, luxury. We announced that James transaction in Miami. That's where inflation's helping us, right? F&B, curating some art, curating music, providing a different type of experience at that high end. You can drive rates and you can change the atmospherics in the hotel. So classic up branding, repositioning, bring your unique expertise to the asset. Hire the right GM, hire some sales executives, hire the front desk manager that's also making sales calls, and you unlock value that way.
Azim, how important are the people? He said GM. How important is the right GM?
Huge. When we launched our, part of the motivation was growth, but a large part was scaling our culture. Because that GM, you're trusting an asset that's worth $15, $20 million more in, y'all's case especially, to your GM. I mean, they're the fiduciary, the captain, the CEO of that asset. And the GM makes or breaks it in a big way. So they're huge. And it's why in our company, we put a big emphasis on our culture.
Yeah, I would
That's why
argue.
growth is important, right?
Correct. I would argue that's why you're so successful. But go. You were hitting on something. I know you were going.
No, it's why growth is so important, because I don't think you can sustain your culture without growth, right? But you need growth to sustain your culture.
Because those people, I'm going to put words in your mouth, because they need somewhere to go.
Yeah, absolutely. And growth is exciting, right? It provides them opportunity where they can move up the ranks.
Neil, you echo that?
Oh, yeah, no question.
Yeah. I mean, we talk about it all the time. People are important. People are important, right? At every level, whether it's Azim, whether it's Brian, whether it's our team, the people are important. People are the number one thing. And you hear that over and over again, and it's not just cliche. And I don't think we can repeat that enough.
Yeah.
Right? I mean, you're saying you're growing just so your people can have a place to go.
Yeah, and yes, absolutely. And those stories of their growth, spread throughout our company and become very infectious. That, I started here and now I'm here and and that really sustains and keeps that GM motivated. Being a GM is a hard job. I mean, I went to law school, I practiced law for a while, but I have failed inspections as a GM. Several. I mean,
Should we ask
That
your
damn
team
living wall, right?
yeah.
Should we ask your team if they'd hire you as a GM?
Please don't. They would
don't.
not.
Please don't. Mark, where's the market headed? What do you see? What's your crystal ball showing you? How worried are you about the time that we're in right now? How worried are you about these tariffs? That's just the topic of the day, so I'm going to bring that up. How worried about travel impacts? How you were about trade wars?
That was a lot of questions.
All right, I'll answer my own question. So my brother, Lee's wife, Kristen, then you can piggyback off of this because you have a better answer than I will. But just an example, his wife, Kristen, works for Chick-fil-A, and he told me this morning that their conference was canceled coming up. They had a travel event to somewhere, and then it was canceled. And it's canceled because profits at Chick-fil-A are down. Sorry, I hope I didn't share any world secrets there. Whoops.
Securities and Exchange Commission, it'll be waiting.
Right, and somewhere in there is just sort of recession, and things are more expensive and people aren't spending as much at the same store. And oh, by the way, there's a bird flu, so if you're Chick-fil-A, that might be a problem. Your costs are up, your expenses are up, your revenues are not up as much. Same stuff we're seeing, right? So, and then just bringing it back around, full circle, land this plane. If they're not traveling to a conference, they're not staying in hotels, they're not on airplanes, they're not traveling Uber, they're not buying, they're not doing all that stuff, right? How worried are you about that, Mark?
Then you relate your comments to the market, both macro and micro, and the answer is really different. I would have thought 5 years after the pandemic that markets would have really smoothed out and be more consistent as they were back in the teens, much more consistent across the U.S. Today, I find we're still in some incredibly choppy markets where we're doing great in North Carolina today. Milwaukee's still a tough market, and parts of Chicago suburbs are very tough. Right here, Atlanta perimeter and Buckhead, very tough markets. So more and more today, it depends where you are than it had, I think, in a lot of the years past. But that brings opportunity for those who look forward and have some guts and maybe some intuition as well as good luck. There is seeds of opportunity for those hot markets. You got to pay up and hope they continue to do as they have. But it all gets back to what's already been said. We're in a very, very intense people business. We at Concord now have over 8,000 associates. Many of them have worked with me, and I'm fortunate to say this, over 30 years. So that stability of a human capital has us be able to swim against these currents or with the currents as they change across the nation, I think, in a way that we can breathe at the end of the day. But really, really hard to forecast for all the reasons you've said. We have hotels in Canada that I worry about in a big way that I didn't even worry about 90 days ago. And as Canada relates to Florida, never thought that it would have such an impact. And that's just one instance. So we're seeing this choppiness, both from inflation and, of course, the geopolitical situation that none of us can predict, that I think is with us for a while, for sure.
Neil?
Yeah, it's interesting. We operate a ton of hotels in Virginia, which is the state that's most dependent upon the federal government. And we've received so many cancellations for conferences for the balance of the year. And that data those conferences have not shown up in the data yet, right? So that's going to be coming in the future, right? That's going to affect STAR data going forward. But, even beyond all that, I would say I'm still very optimistic. There's a stat that came out that top 10% of the U.S. population accounts for 50% of the spending in this country, right? Just the top 10%. And the top 10% are people that make over $250,000. What's even more interesting is that over the past 4 years, all of the growth in spending has come from that top 10%, people making over $250,000. People making less than $250,000 are just keeping up with inflation. And that's obviously not great news, but for our industry, which a lot of times we're catering to that that higher income population that's staying at our upscale hotels and upper upscale hotels where we operate, they're still doing fairly well. And as long as the stock market, I think, holds where it is or doesn't fall too far, there's still going to be confidence. There's still going to be that disposable income. Rates are coming down. That's going to help support growth. And I'm still very bullish for the balance of the year.
So what are you guys doing? On your bullishness, what are you doing? How many are we building? How many are we buying? What are we leaning in specifically? Or are you nervous about the DC submarket?
No, I think we're looking at this as opportunities, right? I mean, this is our chance to buy some great assets in DC. I mean, DC's not going anywhere, and it's the capital of this country, the capital of any other country in the nation. People would be, jumping, up and down to get a hotel in those areas. So we're definitely looking at that. We bought a couple of hotels last year from, these big portfolios that came out. So, one of the things that we're focused on is who are we buying from? How are they managing it? Who is managing those hotels, right? And there's a lot of these big portfolio traders, right, that are just buying and selling. They're not really stabilizing the asset, right? So that's where we're looking at. Can we really improve the operations? Can we pay, less than that 9 cap and then bring it up to, a much better return? So we did that last year. We're obviously developing a lot. We're doing a lot of best-in-class hotels. We're definitely a contrarian. It's for us, it's all of our own equity. So we like to kind of go against the flow and really, develop when others are not and buy when others are not.
Mark, pipeline?
We operate hotels in all segments. I couldn't say that a few years ago, but we started attacking the lower tiered extended stay just now 4 years ago and have built a number of those hotels and continue to build them opportunistically. We see those being outstanding opportunities in high growth markets, but not so much in some of the lower growth markets. And we can, in fact, still underwrite those as ground up opportunities in places like Raleigh or Dallas, San Antonio, Phoenix, where we would have a more difficult time doing that in Toledo or Detroit. So again, it depends where you are. In the upper upscale, we find it more difficult to build those hotels. We finished a beautiful Westin here just north and east in Gwinnett just 1 year ago. Could not have done that without city support. We look for those opportunities where cities and counties see a great need to help their county or environment grow, and they're willing to put skin in the game with adept investors and developers and operators like us. So my message is there's opportunities wherever you look. It's just fundamentally how you find them takes different set of disciplines, but all of them bring opportunities depending where you are, I think. There's some markets we would choose not to invest in today, for sure.
But that's also your development expertise, and Brian, I'll come to you. But that's your development expertise, and part of me is my thesis of lean into what you know and what you do well. So you're a very good developer who can go into cities and talk them in and say, this is what we're going to try and do, and this is why you need this here, and this is why we've done this. Neil's the same. We've done this so many different times. This is why we can be your partner. And then there's fees in that. I love it real fast. Neil's my buyer today. I don't know if everybody picked up on that.
Let's go.
Back when I say 6 caps, right? And you guys are like, Teague's just a salesman. He's full of crap. Sometimes. This is the buyer. I'm putting words in your mouth.
Yeah.
But this was who was developing, knows how hard it is to develop a hotel in DC, knows how hard it is to develop, pick your submarket, doesn't matter. And it says, I'll buy that. I'm a long-term owner. I know how hard it's been to get into that market. So when it comes to market, yeah, Teague, I'll buy that. That's a reasonable basis. Because, the 6 cap is off of a lower NOI, right? So his basis, his cost per key is very reasonable, and that's where he's like, yeah, I'll lean in and buy that. Does that make sense? That we're seeing a lot more of the historic developers who before would say, I'm going to do that, would say, I'm going to build a hotel because I can build it cheaper than I can buy it. That today are saying, actually, that's not true. I can buy it cheaper than I can build it. Did I say it? You agree with that?
Yeah, we bought those portfolio assets last year. That was the exact thesis that we had. And a lot of the hotels that we brought from you and your team over the years have been great home runs for us.
Right. Yeah. So I think there's a major cycle, right? Most of our sellers are those institutions. Again, they're selling sort of downstream for whatever reason, and they just think a 6 cap is fantastic. And these are the buyers moving up. And in the last cycle, it was the opposite. We were selling Neil's hotels up to Wall Street that was buying and aggregating. And in this cycle, it's been the opposite.
I would add there's a lot of opportunities for those of us in third-party management because the amount of concern, churn in the market. There's many owners that don't want to leave the business of ownership, but they are looking for better performance. And so we are seeing more churn in third-party management contracts than I have seen in years back, which brings great opportunity for those that in this tough business of third-party management that can seize those opportunities and really analyze and show owners that they can produce better results and make a bet on us as it relates to Concord. But there's certainly a lot of us in that room that make a living of third-party, unprecedented amount of opportunities in that business. And frankly, I think it may get a little better than what it has been over time because there's been some fundamental changes in the third-party business that we've all read about, but I think gives us better opportunity in future years. There have been some bad contracts written in the last 10 years that aren't very good for both owners and operators, but with some of the unsuccesses that have occurred, we're seeing the ability to drive a little better contracts than we were just even 3 years ago, because owners have kind of awakened and said, hey, these days of 30-day contracts, you kind of get what you pay for. We're in 30-day terminations. So that side of the business is changing quickly over all 50 states for sure, but bringing new opportunities.
Brian?
Yeah, I think Neil and Mark both make great points. Neil talked about some of the risk that his company's exposed to as a function of some of the zigs and zags in DC, but he also said, I'm looking for opportunities. And I think that resiliency that, we've fortunately or unfortunately had to show over and over again, from 9/11 to the real estate crash to COVID to whatever's coming, we do seem to get on the right side of Azim's risk trade, right? We take the risk, and in most cases, there's a reward. So if we're on the precipice of some shift, what is Neil's attitude? Let me jump in there. Let me see if I can grab some assets in DC and Virginia, and that will turn around. And I love Mark's point. I think one unique thing that's happening around us innovating our way through lodging right now is hire a subject matter expert, right? Not every owner wants to be an operator. Not every operator is the same. Not every operator can play in every class, but there are world-class enterprises like Mark's that have perfected certain parts of the business and have great relationships. And I think if you don't want to operate or you need an expert, hire an expert, and there's margin to be had there. Azim as well has got one foot in both camps, where you're taking ownership risk and you're providing a service to your guests. And we'd love to have you all as Sonesta franchisees.
Yeah, I mean, the hotel business has definitely evolved, right? I mean, there's all these different types of hotels. There's full-service hotels. There's economy extended stay, limited service. There's these soft brands now. And each requires its own discipline. And I think as owners and in the hotel space, I think we need to be respectful of that, because a hotel is not a hotel is not a hotel. And each requires its a certain level of management expertise, right? I mean, I don't know anything about a resort hotel. So, I mean, but people probably like Concord and others do, and they know how to run those hotels. And if I try to run a resort hotel, I'm probably going to get myself in trouble and or have a learning curve that's that's pretty harsh. So you have to be respectful of the disciplines, the different disciplines that are involved in hotels. We didn't get into the economy extended stay space until about a year or so ago, because we didn't know. I don't know anything about that space. And I don't want to come in there thinking that, it's a Hampton Inn or a Comfort Suites or Holiday Inn Express and begin to bark out stuff that are just totally not applicable to that space and screw that model up. So we have people on our ops team that have cut their teeth in that space. So now we're going to go into that space.
As an example, and we're sort of wrapping up, so I'm going to go through closing thoughts and like advice you'd give, but just a fun one. So Woodsprings in the low economy extended stay, Woodspring just announced owners don't have to provide soap anymore. Wow. That's right. I want you to move that.
Southwest is charging for bags, and Woodspring, you don't need soap?
You got to bring your own. Now, Brian, you got to bring your own. So my point is, it matters where you're. Try that at a Courtyard. Let me know how that goes.
I used soap this morning.
Yes, great. All right, closing remarks, but what advice do you have for the next?
My advice is to take risk. When cash sits on the sideline, especially right now, it does lose its value. When we built from 2009, which was really tough on us, until 2016, we didn't build a single new hotel. And when we did, I was like, oh my God, this is nearly $100,000 a key. Now $100,000 a key in the segment that we play in is nothing, right? It's gotten to 160, 170. So you have to take risk and realize that sitting on the sideline also means risk. And then I think what we just talked about is being respectful of the different disciplines, whether it's operationally or within different segments or underwriting deals, that the hotel space involves.
Love that. I see where you got the 80 hotels. Brian.
I think lean into your strengths. If we're going to go through some choppy waters, we just went through some of them 3 or 4 months ago, and we all learned how to use those muscles. Go get those playbooks out, make sure your expenses are in line, make a couple extra payments where you can, check in with your banker before you're in hot water. Also start to see what's coming to market, because I think some things will come to market. Look for those markets that create opportunity. Associate yourself with subject matter experts that care about your success. And just, rework those muscles that got you through the last 2 adventures. And if we get a third adventure, we'll get through that too. The aspiration to travel continues to be one of the highest it's ever been. I think unemployment is something to watch, but even when we have challenges around that, we were talking about it in the green room. It's part of the human condition. We climb up to the top of the mountain, we look to see what's over the other side. And I think that will continue, and ultimately, we can build the businesses on top of that.
Amen. Mark?
I always like to tell my team that this is not only the business we're in, called hospitality, it's our art form, it's our craft, it's what we at our company are incredibly passionate about, and we'd like to enthusiastically spread that passion in our company as though it's epidemic. When you get to that point, you find yourself with a whole bunch of winners. And the more people that are winners on our team, the more that can execute every day and want to win, helps us grow, helps us succeed, helps us have fun. And those are our mantras that we get up every day. And all this other stuff we talk about, growth, which I'd love to talk about all day, the rest kind of helps and comes by itself, but it's the passion for our craft that really leads a company called Concord anyway.
Neil?
Yeah, I think we talked a lot about development, acquisition, it's all very sexy, and I've seen a lot of young people when they enter the industry, they enter in as analysts, they enter on the investment side, but my advice is focus on the operations. Whether you're new or whether you're established, understand your business, constantly challenge the assumptions on how you do business. Don't do that from the office. Go to your hotels, observe what's going on at your hotels, challenge the way people are doing things, and really learn about your business. Like we talked about tariffs, most people don't really understand how tariffs work. You know, for example, tariffs are not based on how much you pay for the product. It's based on the product, how much the product costs at the factory in China, right? So you can talk about a product that costs $10 in China that you're paying $50 for. The tariff's on the $10. So you're talking about $2.50 on a $50 product. Excuse me. So it's much less impactful than people think when they see the headline number. And same thing with freight. Freight is a good example where vendors just kind of come up with numbers, and that's really a profit center for them, right? So challenge everything that you're dealing with and really work to understand the business.
I think that's so well said. And I'm going to close it out. My sort of forward-looking comments. We are definitely in some uncertain times right now. A lot of noise, a lot of reality, but a lot of sort of not reality, $2 tariffs versus bigger. My positive outlook is that I think, I've sort of said to anyone, give us through July and then come back and check and see how things are in July. My instincts are that it's all going to smooth out by then, whether it's tariffs, whether it's global wars. I think Ukraine will be figured out by then. I think the Middle East will be figured out by then. I think a lot of this stuff is just going to start figuring itself out. The debt, I think some of these geopolitical things, passaging of bills, getting the tax cuts done, I think all that stuff's just going to work itself out. So I think the second half of the year and then all through next year, I just think it's going to be up and exciting because I think interest rates are going to be in check. And I know there's really tough times now, and sometimes when you're in it, you can't really see it. But I think now is a great time. I think Neil's attitude is right. Let me buy in DC all I can, because if I can get in at this basis, I think in the long term, I'm going to be happy. And I think that's it. And I think we're in a fantastic industry, and I think we know that. I'm now going to give my plug. I'm super excited. The keynote speaker tomorrow is Jesse Cole. If you don't know him, if you do know him, he's awesome. It is Savannah Bananas. And I've been getting him here and researching him, so I've gotten to know him a little bit. This is not about baseball. If you think it's about baseball, you're not paying attention. He is a leader. He is an innovator. He is, my word is, he's our generation's P.T. Barnum or Walt Disney. So he's into entertainment, and it's all about his people and his culture. So if you come pay attention, come listen tomorrow. He is going to be fantastic, so I can't wait. Thank you all for being here. Thank you, panel. This is great.